Have you ever traded differently just because it was your own money on the line? This was my first live trade using my own capital, no prop firm, no evaluation account, and it exposed something I wasn't expecting. My name is Vi. I document my journey to becoming consistently profitable, wins and mistakes included. Let's jump into the chart. This trade was on USD CAD earlier this week. We're here on the 15-minute and can see that we're clearly bearish. We have the swing high and we've broken structure to the downside and created a swing low. Price has since retraced back up the leg as we enter early New York morning hours. If we move price forward, we can see that we liquidate a strong high in this bearish order flow. This 15-minute candle does not close above that level, which tells us key information. We can see this as liquidity sweep because sellers immediately step in and maybe taking that liquidity to fuel their move back down. It's at this point that I'll drop down to the 1 minute to see if I can get a sense of this confirmation and find an entry. Here on the 1 minute, I've circled this ranging price action representing a key demand zone that I feel needs to be overrun by supply in order to convince me that order flow has shifted. If sellers can close below this yellow line, then I'd be convinced of that order flow shift. We can see that price has approached that line and buyers have already stepped in to defend. If we zoom in and move price forward, we can see that sellers eventually do come in and overrun that demand zone. They're able to close well below it, telling us that sellers are now in control. Notice the displacement associated with the move past this key level. It tells me that there's some conviction here and that buyers have stepped aside. Here on the 5 minute, I target this fair value gap for my entry. Stops go above the high, and for final take profit, I have two options. I can either target the week low of the 15-minute external leg or this previous day low from earlier in the week. For today's exercise, I'm going to target this red line denoting the previous day low, giving me just under a 3-hour trade. As we play price out, price tags me in. By the end of New York session, I'm in profit. Now here's the difference. With a prop firm, I would probably need to close this trade out because of their prop firm rules, but this was my money, so I was able to hold it overnight. Remember, this was my first live trade with my own money, so I woke up in the middle of the night during London session to find that price, while having had moved down, was starting to retrace back up. I was still confident in my overall thesis, but I knew that key news was releasing at 8:30 Eastern, so I ended up moving my stops lower just so that I can save some profit right above Asia high. Looking back, this was my mistake, since Asia high is a key liquidity pocket, and sure enough, at 8:30 once the news was released, that volatility caused a move up that just wicked me out. Yeah, I walked away with some profit, but it was a smaller profit than I had originally planned, and that's when price proceeded to melt. It hit my original target of the swing low and flew through the previous day low that I also had marked up. This trade wasn't about analysis. It was about trust. My thesis and structure were correct, and my targets were logical, but I interfered. Trading your own capital hits differently. If I had just gone back to sleep and left this one alone, the market would have paid me for it. So my first trade with my own money was a winner, but more importantly, it was a lesson. Trust the work, let the probabilities play out, and don't get in your own way. I'm not a guru. I'm just documenting my journey towards consistency using market structure, supply demand, and price action. If you're on the same path, then subscribe and let's keep sharpening our edge together. If breakdowns like this help you see the markets differently, then check out this next video here and I'll see you there.